Okay, so I'd like everyone to just take a moment to pause the video and to attempt the question on hand. These are all transactions for a cash book. Simple enough, right? I'll pen over to the completed cash book right now and explain each transaction briefly. So, again, here is the completed cash book. So, for the first transaction, it said cash on hand. And in brackets, it says positive bank balance of 1,650. This means that this is your balance brought forward, which is entered here. And as you can see, sometimes in transactions, they might just give label numbers like 1, 2, 3, 4, 5, 6. Sometimes when like they skip a number or two, it's indicative that it's a date. So then you enter the date to correspond here on your cash book. So yeah, back onto the question. So it says cash on hand, 1,650. So it gets entered onto the debit side of your cash book because it says it's a positive bank balance, meaning it's on the debit side. The second transaction we had was sales for $16,000. And you can see it's entered here again. Simple enough because sales is an income and your incomes come on the debit side. The third one is actually a bit tricky because it is a payment to creditor. So earlier I said debtors and creditors don't usually get entered into the cash book, and that applies um, in many instances, except in the case where you pay your creditor or where a debtor pays you. The reason for this is the whole point of the cash book is to record the flow of money. So when you pay a creditor, that is actually money going out of the business. So it gets entered onto your credit side. I did enter it underneath water and electricity because I kind of skipped it, but yeah, so it was supposed to be on top of water and electricity, but it's fine. But any payments to creditors get entered on to the credit side of your cash book because it is money going out. So then you enter the name of the creditor with the amount that you paid. The fourth, or what happened on the fourth, was you paid for water and electricity. Water and electricity is an expense. Expenses go on the credit side of the cash book. Wages is also an expense because you have to pay your people, so it's money leaving the business. So again, it's on the credit side of your cash book. Sales is an income. It's money that the business is receiving. So it gets entered onto your debit side. And we had sales of 18,000 Namibian dollars. Bad debts recovered is also falls under debtors to some extent, but in this case, bad debts recovered is an income because we get taught that bad debts are when your debtors don't pay you back and there's something happens like they declare bankruptcy or they're declared insolvent or whatever, so they can't pay you back, or you can't even track down your debtor to give you back the money that they owe you. But bad debts recovered is something when you had a bad debt in the previous financial year, and then after that month or whatever, the debtors come back and they actually pay you what they owed you. So bad debts recovered is then considered as an income, which is why, and this is money you are currently receiving, you enter it into your cash book on the debit side. We didn't do the debtors in the creditors journals yet. I don't know if we will even do them, but yeah, it doesn't go into that. It comes into your cash book, so you don't need to worry about it. So bad debts recovered is an income, and it gets paid on it goes into your debit side of the cash book. Repairs is an expense, goes onto your credit side right here. Rent received. You need to be careful when it comes to rent. So it can either be rent received or rent paid, as you can see here. So rent received is an income. It means that someone is paying you rent for one of your properties. As it is an income, so your rent received gets put onto your debit side. My apologies, my battery was low, so I scratched now because my flash went off. But anyways, as I was saying, rent received goes on to the debit side in your cash book because it is money that you are receiving. Rent paid is an expense. You are paying someone for their property, for the use of their property. So you enter it on your credit side of the cash book because you are paying someone. So money is leaving your business. Bank charges is also an expense because the bank charges you for their services. You add it on to your credit side once again. And then finally, goods purchased. So your purchases is an expense again because even though you are buying stock or whatever, um, you still need to pay money for it in order to receive the goods. So your goods purchase doesn't, you can enter as goods purchased or just as purchases as I have done here, as you are paying for something, money is leaving the business. So it gets entered onto the credit side of your cash book again, credit side. So what then happens is all of this doesn't exist yet. What you then do is you total the amounts on both the debit and the credit side. So you start with your debit side, then you add all of these amounts together, then you write it in pencil underneath the double lines. Oh, sorry, by the double lines. So before you do that, you will look at the last transaction in your cash book. So this would have been the purchases on the side because this balance isn't here yet. So then you leave space open underneath the last transaction and you draw a single line on top followed by a double line at the bottom and you leave it open. You then tally your balances on both sides. So you tally these amounts and you write it in pencil. The reason you write it in pencil is you aim to see which of these two balances are bigger. So then you tally this side's balances and you end it in pencil. So between 50,650 and the 20,160, the 50,650 is bigger. You then enter the bigger amount in between these lines. So you enter the 50,650, 50,650 this side. And then the side on which there is a difference between the amounts, you subtract. So you can see these two amounts are the same. This is where your difference is. So then you take the 50,650 and subtract 20,160 from it, which will then give you this amount of $30,490. So then you enter this $30,490 on top of the line you drew, and then you write the date of the end of the month. So we had June, so the end of the month for June is 30 days. So then the 30th, you write your balance and then you carry down. So the CD and the PD are very important. The carry down means that this balance has to be carried down to your new month, to the new financial month. The PD means that it has been brought down from a previous month. So you can see this is exactly the same transaction. The only difference being the two dates and yeah, the distance into PD and this is CD. So what all it means again is this is your carry down balance. So this 30,000 needs to be carried down. PD stands for it was brought down. So this is very important because this tells you whether or not you have money in your bank account. In the business's cash or in the business's account, in the cash book, if the brought down balance appears on the debit side, it means that the business has money. If this amount was to be on the credit side, this means that you would have been in an overdraft, meaning that you owe the bank money. This basically means the bank owes you money because the bank is in possession of your money. So that is the purpose of this. In the exams, they might ask you something, state whether or not the business has money or whether or not the business is in an overdraft, and then you tell that from whether or not the brought on balance is on the debit side or on the credit side. On top, you can once again see it's favorable or that the business has money because it's on the debit side.